Welcome to The Explainer, where we break down the stories hiding right behind the headlines.
So, today we're talking about McDonald's. I mean, you see those golden arches everywhere, right? From Tokyo to Toronto, they're an absolute titan of the fast food world. A brand that honestly feels like it's just on top of its game.
And yeah, the numbers seem to back that up. Just look at this. In a recent quarter, their global sales shot up 3.6%. That shows some really strong growth all across their international markets. On the surface, it's a glowing picture of success.
But if you look a little closer, especially right here on their home turf in the US, there's this really fascinating and pretty complex puzzle they're trying to solve. And it's a challenge that cuts right to the heart of a simple question. Who is their customer?
Okay, let's dive into what's really going on here. The company actually has a name for this problem. They call it the bifurcated consumer. And it basically means they're dealing with a split personality right inside their own customer base.
So here's where it gets really interesting. In the US, McDonald's is seeing two completely different and frankly opposite things happening at the exact same time. On one side, you've got lower income customers who are visiting less, a lot less. But on the other side, higher income customers are actually showing up more.
And listen, this isn't just some analyst's theory. The CEO himself laid this all out on a recent investor call. He admitted this split has been going on for almost 2 years now. And it's creating a real dilemma. I mean, how do you appeal to two groups that are heading in completely opposite directions?
So what do? How do you fight a war on two fronts? Well, first, you go back to your roots. You go back to the thing that built the brand in the first place, value. They had to win back those customers who were really feeling the economic pinch.
Management knew they had a perception problem on their hands. Customers were telling them, loud and clear, as they put it, that the classic menu items were just getting too expensive. That idea of affordability, which used to be a given at McDonald's, had become a real concern.
So their big move was to bring back nationally advertised extra value meals. We're talking clear, simple, affordable prices for the classics. You know, a $5 breakfast meal here, an $8 Big Mac meal there. It's all about making value predictable again, right on the main menu.
And you know, this is not some small little side promotion. Extra value meals are a huge deal. They make up a massive 30% of all transactions in the US. So getting this piece of the puzzle right isn't just important, it's absolutely essential to their entire American business.
But they aren't just playing defense with value meals. At the exact same time, they're on offense, pushing hard to innovate their menu. Why? To attract that other customer, the one with a bit more cash to spend, who's looking for something new and exciting.
First up on the innovation list, chicken. The company sees a massive runway here. Think about it. Globally, the chicken market is twice the size of the beef market, and it's growing even faster. For them, this is a huge potential growth engine just waiting to be tapped.
And the demand is definitely there. Just look at the return of the snack wrap. During its initial launch, almost 1 out of every 5 US customers bought one. That is a runaway success, and it just proves that the right new product at the right price can create a serious buzz.
Next up, they're going after the beverage market. And this is a $100 billion space that's growing way faster than the restaurant industry itself. So after testing out ideas with that spin-off concept, Cosmex, they're now bringing what they learned back into the main restaurants.
So in over 500 restaurants, they're testing a whole new lineup of drinks. We're talking everything from cold coffees and fruity refreshers to even energy drinks. The goal here is pretty simple. Bring people in during those slower, in-between meal times and get them to spend a little more.
Okay, so let's zoom out a bit. Let's look at the global picture and see how this balanced, two-pronged strategy, value on one hand, innovation on the other, is actually playing out in their other major markets around the world.
And what you see is that internationally, this strategy is pretty much firing on all cylinders. I mean, with growth over 4% in both their big international markets, it's pretty clear that this combo of value and innovation is working really well outside of the US. And the proof is right there. Places like Germany, Australia, and Japan are showing that this playbook works. Australia, for instance, actually locked in their value prices for a whole year just to give customers that predictability. And Japan has seen more people coming in the door for almost 2 years straight. It's all about executing on that core formula: value, marketing, and innovation. So all of this leaves us with one big, fascinating question at the end of the day. McDonald's is making this massive bet that it can be the go-to choice for, well, two very different people. The person who's carefully counting their dollars for a $5 meal
and the person who's willing to splurge on a new fancy drink. Whether or not they can successfully serve both of those worlds, that's what's going to define the next chapter for the Golden Arches.